Hello, entrepreneurs. Once again, it's Joe DiChara coming to you live from downtown Flushing with another amazing segment of how you can win big at business. I gotta change this thing because I added big, and that's what we want to do. We want to win big, and what does that mean? Well, the first thing it means is starting a business and running a business that's going to stay in business. And how do you do that? Well, you don't start. If you put off as long as you can spending a lot of money on a business that will not produce revenue. Okay, now it may seem obvious to people that you need to have sales to be to have a viable business, but unfortunately, in my experience, most people overlook this, thinking that they'll figure it out later or that what they have is so damn valuable that people will have to buy it, or they have such a great idea, the money will show up. Or here's one: follow your passion and the money will follow. Well, listen, I look for people that have passion. It's a lot easier to make money when you have a passion. But you got to take that passion and mold it into some kind of revenue producing model. And that is why Tony Robbins said that given enough time, 96% of new businesses will fail eventually. You know, the numbers are all over the place. Forbes claims 8 out of 10. I have a graphic that I use in my, whenever I need a graphic to explain this. Even the SBA, which is lying through their teeth, says that 50% of businesses will be gone. 50% of new businesses will fail within the first 5 years. I don't know where they're getting those numbers, but if that was the truth, we'd probably be up to 100 million businesses by now. So their math just doesn't work. So let me back up for a second. If you don't know me, my name is Joe DiChara. I am a serial entrepreneur with a CPA license. I've been a CPA for a long time, well over 30 years. I've been in accounting, over 35 years. And, I was born to be an entrepreneur. My dad tricked me into becoming a CPA because at 17, he told me that, that guy over there that's a CPA, he runs businesses, and business owners go to him for advice. So that was it. I wanted to learn about business, and I wouldn't have to go to somebody else for tax information, for tax advice, because I would be the guy. And I actually didn't know that being a CPA meant yet you were going to be an accountant. Yeah, I mean, it was a little obvious, but I skipped over, oh, yeah, okay, the accounting thing, but, I'm going to just own businesses. And it started when I was 10, when I ran a casino in my driveway. So that's my story. So from the age of 10, I was obsessed with business. I was always going into business, and I've always been in business. And it turns out, talking about passion, my passion is all about helping the new and small business owner overcoming all of the tremendous obstacles that we face as business owners on a daily basis and get to that point where they're not only seeing revenue, but they're seeing cash flow. And that's my story. I'm sticking with it. That's what I've been doing for forever, for as long as I could remember, in some form or another. I was trying to help people make money and make money myself. So, it works both ways. So if I'm successful in what I do, then and you're a client of mine, that's pretty good for you, because I'm going to do everything I can. I'm going to pull out all the stops, all of my resources, all of my connections, all of my knowledge, and I'm going to put them to work for you. And I'm not trying to pitch you. I'm just trying to tell you who I am. But if you're interested, you can go to timewithjoe.com and book a free chat with me, and I'll talk to you about it. And it's not there's no obligation. As long as you want to talk about your business, you have a question, maybe about tonight's topic, or another topic. But tonight, what I'm going to go through is something I've gone through many times, and I'll keep going through this. And it has to do with your legal business structure. And it's the one of those obstacles that people never seem to address, or very rarely address, because out of 30 million businesses, folks, that's how many US-based businesses we have, 30 million. Over 25 million are still classified as sole proprietors, which is the worst way to do business. Now, I could see maybe a couple of million that are like fly-by-nights, that they're testing the waters, and that's just the way it's going to be. But at some point, if you're in business and you're, generating revenue, you got to look at the other options. And people are just not looking. The proof is in the results, the facts. And the fact is that, 25 out of 30 businesses are still classified as sole proprietors. Now, there's a reasons why that's a bad way to do business. I'm going to go through that with you. But the fact of the matter is that if you want to look at the percentage of business failures, which everybody should be cognizant of this, when you go into business, the chances are you're going to go out of business. That business is going to fail in one way or another. And I'm proof of that too. I must have had 25, 30 different businesses. Some were, viable and legit. Some lasted a couple of days or a couple of weeks, but they were businesses. They were ventures where they were beyond the idea stage. They were to the point where I was spending money. And that's when, I said, well, this is going on my tax return as another loss. So, if you look at that, I'm even worse than the average. I have two businesses today, two separate corporations. So I'm running 2 out of 30. I mean, 28 fail. No, I guess I'm right in the Tony Robbins thing. Anyway, I'm about 96% failure rate. So I'm right in there. The point is that so many businesses fail, and you got to look at the reasons why. Why is this happening? Is it avoidable? And this business entity legal structure question has to be one of the main causes. Because if you start out with the wrong structure, it's going to affect you. It's going to affect your bottom line, legally, psychologically, and at the end, it's going to affect your bank account and you deciding whether or not to close the business or stay open. And so let me go through the presentation. I'm going to give you the whole screen again so you can see what we are talking about business structures. Now, I'm not only going to take you through this, I'm going to help you figure out what is going to be the best for you. Now, I would, qualify by saying, just because I'm showing you this video, don't go out and make any decision. You still got to talk to a professional, because these are the options, but no situation is always entirely the same. So you might have some loss carry forwards that you want to take advantage of or create. There might be other income or no income considerations that, you got to look at tax planning, and no individual can do that on their own unless you've been doing taxes for a long time. Okay. So, get, professional advice. That's the point. So, legal structures, if you're starting a new business, and let me add to that. It's not just starting a new business, because plenty of people have businesses that never address this, just like I said. And I didn't even think of that when I was putting this together. But, what you want to do is, if you have an existing, definitely when you're starting, you should start out right. But because obviously a lot of people don't start out right, there's still time to fix it. So let's go through the different areas here. So learning the best way to organize your business is going to help you protect your assets and minimize your taxes. It's going to help you avoid, a lot of the pains and the pitfalls of choosing the wrong big business structure, or, like I said, not choosing, because that's what happens when you go into business and you don't choose. That's your choice. You're choosing not to choose, if that makes sense. So, like I said, it's not uncommon. So don't beat yourself over the head because you don't know what you don't know. And this is what happens with most businesses. They start a business, and if they're lucky, they start making money. And if they're even luckier, the money is more than what they're spending. So they have a profit and they have cash flow. And at that point, unless you're familiar with the laws, with the different nuances of being in business, and most people don't, at that point, really before that point, when you started having expenses, you should have looked at forming an entity. But the point is that this is common. This is it's not 1 out of 10, 5 out of 10. It's like 98 out of 10 that just do not make a decision. Now, what are the legal structures? And there's not even really 6. And this is another thing that really is amazing, because if there's so few choices, why do so many people make the wrong one and stay with it? So I'm going to go through it, because looking at this, I said, there's 6, but there's really 3, because let me show you. 1, like I said, is a sole proprietor. 2 is a partnership, which is really just two or more people in business, and they're not incorporated. So really, these 2 are the same for tax purposes. Then you could have a corporation, a regular traditional corporation, or an S corp. Now, an S corp is, I'll cut to the chase, is the preferred way of doing business for tax purposes. Okay, for an operating entity. But these are both corps. So really, out of these four, it's really two choices. You're either the sole proprietor, you're either unincorporated, or you're incorporated. And now we come up with the LLCs and the LLP. And an LLP is just a limited liability partnership, which is reserved for people that are like CPAs and lawyers. You can't be a limited liability company. You're going to be a limited liability partnership. Okay. And so these are really the same too. So there's really only three. You're unincorporated, you're a corporation, or you're a limited liability entity. And so let's go through the different nuances of each. The sole proprietor combines their income and expenses, their profit and loss from business on their personal return. So it's not a separate entity, it's just included in your personal return. So right away, you're getting business deductions you're writing off on your personal return. And that's where, a lot of the problems start. And so that's where a sole proprietor files their taxes. Now, I didn't add advantages, although, the SBA and the IRS, they will point out the advantages of being a sole proprietor, which are its simplicity. And that's it. That's why I paused. Really, the only benefit is its simplicity. But here's the caveat, or whatever you want to call it. I don't know if that's the right word. When you start a business, you're automatically a sole proprietor. So how is it being simple an advantage? If you want to do a sole proprietorship legally, you're supposed to go down to your county clerk or whatever it is, your city clerk, and you're supposed to register your business. You don't get off scot-free. You can't just say, oh, I'm in business. Yeah, you can, because there's no way to enforce it. But technically, if you're doing, if you're an Amazon affiliate, or you're doing affiliate marketing or MLM or anything, you're supposed to be registered because they want to know and they want your money. So, yeah, it's easy to start and run a sole proprietorship, I should say. And there's three major disadvantages, and that's the legal exposure. If you know anything, that's one of the first things I learned about corporations. Corporations give the owner a legal umbrella. And what that means is, let's say you have a landscaping business, and there's some kind of accident with a lawnmower, and it's above whatever your insurance is going to cover. They will go after your personal assets. The IRS loves to audit sole proprietors for the simple reason that they make the most mistakes on their tax return. Most sole proprietors prepare their own returns and don't know or understand what triggers an audit. And plus, the IRS figures that they're unsophisticated for the most part. If they're still a sole proprietor, that's an obvious red flag that they don't have a tax professional. And they know that most sole proprietors don't keep proper books and records for the simple reason that they're not getting professional advice. So you might say, well, what if you're a sole proprietor and you go to a CPA or an enrolled agent? Well, if they're doing their job, they're going to tell you to become a corporation. So most CPAs will, steer their clients from a sole proprietorship to a corporation. So you don't want to be on the IRS's hit list. And then the third major disadvantage are the Social Security taxes, because you have to pay Social Security taxes close to 15% on your net profit. So if you take a business owner netting $50,000 a year, they're going to pay almost $7,500 in self-employment taxes before any income taxes. Now, you're supposed to pay Social Security taxes, but the thing is that when you're a corporation, you pay on your salary, and you don't have to take all of the profits as salary. And that's where a lot of the tax savings come into play. So, you're exposed legally, you're exposed financially, and you're being overtaxed. You get basically no tax benefits from being a sole proprietor. Now, partnerships are very similar, only that you have more than one. Now, typically, when there's a partnership, a lot of times there is professional advice, because people are smart enough, intelligent enough to go to an attorney, I think, and get a partnership agreement on. But it's a higher level of responsibility than just one person, winging it. So the disadvantages are, again, the legal. You don't get any legal protection. You're liable personally, and you're still paying that same close to 15% on your net profit. Now, partnerships are good for the real estate industry. That's what people usually did. Different form of liability, and that was before LLCs were created. And so now we come up to the corporations. And a corporation is a legal entity, just like a partnership, but the difference is a partnership is a legal entity that, and I'm not a lawyer, but there's not just one person involved, there's two people. A corporation is a separate legal entity that gets, usually it's formed in the state that you live in, the state that you're doing business. And I'm not going to get into the whole Delaware, Nevada, Washington State, corporate setup. That's a whole different issue. But so when you incorporate, you file your return on a separate corporate return. You're totally separate from your personal return. It doesn't even show up anywhere on your personal return unless you're taking a salary from a traditional C Corp. Now, the disadvantage of a C Corp is that you get taxed twice. Like I said, there's only two ways to get, well, I didn't say this, but I did say that if you have a corporation and you take a salary, there's one way to get your profits out of the corporation. If you take a dividend, then you're going to be taxed as a dividend, just like it's a public company. So if you own a C Corp, you don't want to have a C Corp that has profits. And this is where you get into tax planning, and you need a professional. But the point is that there are disadvantages to a C Corp. It is more complicated. There's state, corporate governance rules that you have to adhere to. But when you're a single owner shareholder, it's not that complicated. It's just a couple of extra forms that you may have to file with the state every year. And, there's probably a fee involved, like an annual report. and they just want to know who are the directors, who are the people running the corporation. So, that might be another disadvantage, but it's not that big a disadvantage. The double taxation is a big disadvantage. And then we come to my entity of choice, the S Corp, which, usually it's not usually, it starts out as a C Corp, and then you have to make an election to be treated as an S Corp because it's a special type of entity for tax purposes. You get the same limited legal protection as a regular corp, plus there's no double taxation. So, and there's not everybody can be an S corp. You can't be a foreigner. You can't be a corporation. So you got to be a U.S. citizen, and that's it. And you're limited to X amount. You're limited, I think, to 100 shareholders. So these are for small business entities. And so let's go. Oh, so I didn't go through the benefits. Now, the benefits of the S corp are there's no Social Security tax on the net profit. So you could take a salary and take a dividend distribution, and the corporation isn't paying any taxes. So there's only one level of taxation, and that's why they call it a pass-through entity. Now, a limited liability company is one of the most misused, misunderstood entity choices because it's not a tax choice. What all you're doing with a limited liability company is you're addressing the legal aspect of owning an entity. So you get that legal umbrella that a corporation gets. So in other words, something happens in your business and the insurance doesn't cover it. Well, that unless it's fraud or an illegal activity, the people that own the corporation are not personally liable. So their personal assets are protected. So when a business owner goes and becomes an LLC, for tax purposes, they are still considered a sole proprietor with the other disadvantages attached. And, that's the audit risk. And what was the other one? I forgot. There were three major ones, but it's still not a good thing. And there's other disadvantages like not getting the same respect as a regular corporation. And my conclusion is that because of the obvious disadvantages of being a sole proprietor and being an LLC, because you don't get the tax benefits, the bottom line is people need to have at least one corporation. This is my belief. Now, whether or not you elect to be a C Corp, an S Corp, is up to you. And like I said, like 98% of the time you want to be an S Corp. But there are certain tax situations that are in place that I can't get into tonight that would warrant being a C Corp and building up the tax benefits. And then you turn it, at some point, you're going to turn that into an S Corp. So the conclusion is that if you don't have an S Corp and you're in business, you need to chat with me. And I'm not going to pitch you on my services, but I will tell you more. I can get into more details, the pros and cons of why you need to look at being an S Corp. And if you can be an LLC and then tell the IRS you want to be an S Corp. But why do that if you can just be an S Corp? So that's my story. I'm sticking with it. I think I'm ending on time tonight. Joe DeChara, join my mastermind group. All you got to do is go to mastermindwithjoedechara.com, and we have a lot of fun. And if you're watching, thank you. Give me a hashtag live. And if you're watching the replay, give me a hashtag replay. And if you have any questions and don't want to chat with me, which is fine, you could put a question in the chat box and I will get back to you, guaranteed. All right. So thank you for your time. God bless. And I will see you tomorrow. Same time.